18.
The Nifty is now up 81 points. 18,080 is what you have. A bit of a short squeeze, this one.
Bank Nifty has seen, after an outperformance, it has slipped into the red. That one is down 66 points.
Of course, been very volatile because its weekly options expiry. So the market's moved in a band. It's a big band, 250 points. But, for last 2 or 3 hours, the market's been rather stagnant.
The Nifty is ending at the low point of the day. The last tick is likely to be closer to around the day's low. What was losing out today? Some of those global-facing themes, whether it was, IT or metals, both of them did take a sharp knock. Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we highlight 6 hours of the trading action in just 5 top headlines. I'm Nigel D'Souza. Let's get straight to the headlines for the day. The Sensex and the Nifty erase early gains in volatile session to end over 0.5% lower as subdued global cues hold sway, but mid-caps, they in fact end mildly in the green. Passenger vehicle makers perk up on signs of a fight back emerge. M&M's Anish Shah says that SUV major is looking to double capacity, while analysts see Maruti making a strong comeback with new launches. PVR skids after prominent investors sell a collective 7.5% stake, and GR Infra sells after the promoters launch an offer for sale for 6.8% stake at a significant discount. Mid-cap stocks outperform with several cues driving counters. Home First Finance perks up on reports of a likely strategic sale, while Aditya Birla Capital gains after the CCI clears investment in its health insurance arm. Optimistic order outlook also drives up KEC. In other stocks, Land Pharma falls over liquidity concerns rising on its parent Fosun. All cargo logistics also took a hit, but tells CNBC TV18 that the national logistics policy will be an enabler. Well, here's what we have lined up on the show for you. In market opinion, we have Andrew Holland, Chief Executive Officer at Avendus Alternate Strategies, and Matt Orton, Chief Market Strategist of Carlyle Towers Advisors. In Big Faces, well, we'll be joined by Mr. Malik, the CEO of Adani Wilmar. Well, here's a closer look of the day's action. Then equities retreated from early highs to end sharply lower. The Sensex and the Nifty, they lost over 0.5% each, as lack of fresh triggers meant subdued global cues continued to weigh on sentiment. The mid-cap index, however, showed some resilience, ending in the green. CNBC TV18's Prashant Nair has a wrap of all the trading action. Prashant, the markets are down for the second day in a row now. Are global cues finally catching up with us?
Well, the market finally obeyed what was happening in global markets, and we ended slightly lower. I say slightly because through the course of the day, the impulse was very much visible to try and buy the dip and see if it comes right back. And it did on many occasions, but by close, we were down about 0.75% on the Nifty. Market breadth, of course, was negative. That has been the case for the last many days, even when the market and the index has bounced back. Where the pressure came from, it was metals like Hindalco, which lost, and technology, which has been a problem area. It did not see a bounce even when the market did spectacularly well yesterday in the face of global weakness, and it was down once again. So Infosys, Tech Mahindra are cases in point. Gains came through from old economy names. So NTPC, Adani Ports, Power Grid were some of the areas which did well. You also had autos as a space, one large area which ended higher. Broader markets, more declines than advances. PVR was down sharply. Nalco, the aluminum names like Hindalco, GR Infra was lower. Phoenix, Policy Bazaar, Coffee Day, GMDC, LG Equipment. Some of these names have rallied so much, so these are just pullbacks and profit-taking that we're talking about. One space which really stood out was tires. C8 was up 20%, limit up. Apollo Tires, MRF, Balkrishna Industries, that entire space was absolutely on fire. Where do we go from here? I think the low that the market saw on Wednesday, which is 17,770 odd, is I think a line in the sand which has to be defended from a trading perspective for those who are trading. The Nifty's outperformance vis-a-vis global markets, and this is a point we've made repeatedly, is still very, very stark on most time frames. The big question is, with global markets continuing to see a little bit of trouble, will it take some sheen off the local markets here as well in the coming days? Will we enter a phase of consolidation after what we've had, which is basically go-go markets for many weeks now? Back to you.
Well, thanks a lot for that, Prashant. Well, let's get in some expert opinion then. Andrew Holland, CEO at Avendus Alternate Strategies, said that the street perhaps is expecting inflation to peak sometime during this quarter. He also expects the momentum in banking stocks to continue. Let's hear him out.
I've been reflecting on some of the reasons, why we've been seeing this, and one of the things that we talked about before, Prashant, was this kind of whole deflation trade going into next year as the global economy slows, and perhaps investors have taken that in terms of that inflation is peaking at some point over the next quarter. The banking sector will be one of the clear beneficiaries of our economic growth, and it's time to be buying. So I think the momentum will keep it going. And we've said before that the leadership in the banks has changed quite considerably over the past few years because of the different management changes that we've seen. So the pecking order is different than it has been in the past.
Well, in more market opinion, Matt Horton, chief strategist at Carolinian Tower Advisor, said that a 100 basis point rate hike by the U.S. Federal Reserve may turn investors bearish on the U.S. equities. He also added that India is looking attractive for an investment perspective. Take a look.
I don't think the size of the hike is going to change my view. If we get a 100 basis point hike with guidance that the terminal rate's going to continue to drift higher, I think that makes me more marginally bearish on U.S. equities. I do. I think that starts to force investors to compress valuations, but that's not my base case. You do get a sell-off in Indian markets like we've seen around the rest of the world. That's probably an opportunity to put a little bit more money to work because the longer-term fundamental trends, both from a macro perspective and company-specific perspective, are holding up very well.
Well, moving to the second headline now. Auto stocks, they're in top gear with the index gaining close to under 1%. Maruti Suzuki, it zoomed close to around 3% as analysts expect the company to make a strong comeback with the new launches. The stock hit a 52-week high in trade. Sonia's with us to run us through all of those details. Sonia?
Well, Maruti has hit a fresh 52-week high today. In fact, that stock has been on a tear. It's up 24% in 2022 already. Brokerages are very bullish on Maruti. BofA Securities or Bank of America Securities has come out with a bullish report this morning where they have raised their target price on Maruti to 10,500 versus 9,500 earlier. They say that Maruti has made a big comeback, especially with a slew of their new launches, and those launches look very promising. A good response to the new Brezza, despite the premium pricing, is very encouraging, and hence BofA Securities has raised their earnings estimates on Maruti. They say that Maruti is now plugging the gap that it had in the mid and premium SUV segment. They expect a volume growth of 14% compounded over FY22 to 25, and they're also revising their revenue targets upward by about 6 to 8% and their EPS estimates by about 9 to 10%. So Maruti as a stock has given you positive monthly returns for 6 straight months in a row. Definitely bullish momentum over here. Back to you.
Thanks a lot for that, Sonia. Well, Mahindra & Mahindra's MD and CEO Anish Shah has said that they are seeing huge demand for their products. In a conversation with CNBC-TV18, Shah said that the SUV major is looking to double its capacity despite hints of global recession. Let's hear him out.
So we are looking to increase the capacity dramatically at a time when there is talk about global recession, etc.
Exactly.
But we have seen just huge demand for our products, and we have one problem today, which is we can't service our customers on time. Because of the level of demand, which is really unprecedented. And therefore, we are looking at increasing capacity dramatically. We are considering whether we can go up to even doubling our capacity, which is a huge statement as an automaker.
Well, Road Transport Minister Nitin Gadkari and leaders of the auto sector gathered for the 62nd SIAM annual convention. Speaking at the event, Gadkari said he is confident of bringing down the logistics costs in India by 10%. He urged the auto industry to focus on making quality products. He urged the industry to cooperate in discouraging sale of petrol and diesel engine vehicles and increase the production of electric vehicles.
Because of air pollution, we are making big roads. Your turnover is going to increase. The 10% rise in automobile manufacturing. But at the same time, we will be responsible for creating more pollution in the country. And where we need to find out the solution for that, need to discourage the production and sale of diesel and petrol engines.
Mass segments like entry-level cars and two-wheelers are facing huge reduction in demand owing to significant increase in the acquisition cost. We have to increase the traction on the other frontier like safety, telematic, information, infotainment, customer convenient feature, etc. Finally, we have to work on human resource development. Industry has to ensure the right skilling and reskilling to make our manpower future ready.
Well, the third headline now. PVR fell close to 4% on the back of a large trade that took place. We learned from sources that a clutch of PE investors, they were likely to be sellers. Nimesh is with us to run us through more details on that. Nimesh?
As you rightly pointed out, PVR is under pressure largely on the back of a large block deal wherein a clutch of private equity investors sold 7.5% stake in the company via block deal. The average price was $18.91, which indicated a 2.5% discount to yesterday's closing price. And even then, the stock is under pressure today. In terms of buyers, I understand 80% of the book was subscribed by long-only funds and 20% was bid by some hedge funds as well. Now, within the long-onlys, it was a mix of both FIs and DIs. And I believe one of the domestic mutual fund was an anchor investor in today's block deal. So a good clutch of investors have bought. But the supply overhang seems to be a key reason why the stock is under pressure today. Remember, in PVR, the institutional holding is quite high. So 83% is held between mutual funds, FIs, and private equity investors. And looks like in today's block deal, it's a shift of hands from private equity to some domestic and FI investors. But the stock is under pressure largely because a big block was sold and at a discount. So that's the key reason why the stock is under pressure today.
Thanks for that, Nimesh. Well, meanwhile, GR Infra as well was down in trade, was down close to 2.5% by the time we wound up after the company's promoters announced an OFS, that's an offer for sale to sell, close to 6.8% stake in the company. Vivek Iyer is with us to fill us in with more on that. Vivek?
The stock in focus is GR Infra, given the fact that the company yesterday announced that the promoters, in order to meet the SEBI shareholding norms, had launched an OFS, an offer for sale, to pare stake or reduce stake up to 6.8%. Now, this particular stake was split into two. The base size of the OFS is around 5.9%, while the green shoe option is for 0.9% of the stake. Now, the floor price for the OFS was set at 1,260 rupees a share, which is a significant discount of over 8% to yesterday's closing price, which indicated and was reason why the share sulked in the session. Also remember, the main reason for this particular stake sale is to comply with the shareholding norms, and the current promoter holding prior to the launch of the OFS was at 86.5%. So this particular supply overhang was the reason why GR Infra was one of the top losers in today's trading session.
Thanks a lot for that, Vivek. Well, time to slip into a short break, but you stay with us. We'll be back in a jiffy with the other headlines.